first half of 2023 was characterized by similar challenges to those we had in 2022 financial year. These included persistent high inflation, unreliable electricity supply, and logistics challenges. Despite these challenges, Merafe recorded solid results, which is the year or the half year at a glance. No fatalities were recorded in the first half of 2023, and there was improvement in the total recordable injury frequency rate. There was no impact of COVID-19 on the operations. Production volumes were lower for both ferrochrome and chrome ore. We continue to benefit from efficiencies at the smelters. Production costs increased by double digits, and as mentioned earlier, power and logistics challenges persisted. Global market uncertainties continue. Stainless steel production decreased and resulted in ferrochrome demand and lower ferrochrome prices. On the positive side, chrome ore prices increased significantly, and together with the weaker currency contributed to the higher profitability. Revenue increased by 11%, and headline earnings of 42 cents per share was higher by 14%. Interim dividends of 20 cents per share have been declared by the board. If we move to the market, global stainless steel production decreased by 2%. Only China showed growth, with all other regions remaining the same or declining. China continues to dominate global stainless steel production, accounting for almost 60%. Global ferrochrome demand has also declined marginally, with only China registering some growth. China accounted for about 65% of this demand. Global ferrochrome production increased by about 6%, contributing to the oversupply of ferrochrome. The increase in production came from China and Kazakhstan, with the rest of the regions either staying the same or declining. Chrome ore imports into China increased by 3%, with 80% of these imports originating from South Africa. Chrome ore prices remain strong, mainly as a result of logistic constraints in South Africa and Chinese port stocks remaining low. On the other hand, ferrochrome prices were weaker due to subdued demand and oversupply of ferrochrome. Ferrochrome prices have been trending lower recently, and current Chinese CIF prices are just below $1 per pound. COVID-19 risks have reduced significantly. However, we are not complacent and continue with mitigation measures. There were no fatalities in our operations. The TRIFR decreased from 2.4 in December 2022 to 2.0 in June 2023. We continue to focus on employee safety with campaigns and programs to increase awareness. Power supply challenges continued. In fact, we had the worst levels of load shedding during the first 6 months. For the operations, we are only impacted by load curtailments from stage 3 upwards. With effect from 1 April 2023, electricity tariffs increased by 18.65%, putting more pressure on costs. The NPA applications, which we reported on previously, are progressing, albeit slowly. We continue to explore renewable energy options to counter both availability and pricing challenges. We are looking at co-generation technologies for off-gas solutions. Both solar and wind sources are being considered, and progress is being made for both on- and off-site projects. Preferred bidders have been selected for off-site generation, and currently commercial structures are being finalized. Ferrochrome production decreased by 9% from 203 kilotons in June 2022 to 185 kilotons. This translates to 96% of available capacity And if we exclude Leidenberg Smelter and Rustenburg Furnace 6, which both remain on care and maintenance. During the winter months, being June, July, and August, only Lion Smelter was operating. This is also a period where electricity tariffs are higher due to high demand. Our total production cost per ton increased by 17%, driven mainly by chrome ore costs. As explained earlier, market chrome prices were significantly higher. Reductant costs were also affected by higher market prices and lack of adequate local supply, necessitating imports. General and mining inflation were also a contributing factor. PGM's production was higher compared to June 2022. However, basket prices were significantly lower. We are focused on ESG compliance and looking at ways to improve our disclosure in this regard. The venture aims to reduce emissions by 15% by 2026 and by 50% by 2035. That's if we're using the 2019 as a base. The economic outlook for the rest of the year is not so great, with disruptions and volatility likely to persist. The global risks, such as high inflation, fears of recession, supply chain challenges, and energy insecurity are likely to continue. Although there are some signs of inflation easing. On the local front, electricity and logistic challenges should remain, at least for the short to medium term. As a result, we expect the second half of 2023 to be challenging. We've already seen ferrochrome prices trending downwards. We will continue to focus on efficiency of operations, cost control, cash preservation, and efficient capital allocation. We remain committed to creating shareholder value.